Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Tuesday, February the 14th, 2023. Well, CPI came, CPI went. We had a little bit of a reaction, looked like that may have done something good, then it didn't, then it did, then it didn't, etc., etc. The CPI number actually came out 0.1% below expectations. And so the market didn't really know what to do. And you would find this maybe curious, being that yesterday I was speaking about the last time when the CPI came out and it was 0.1% better. That the indexes went bananas. The Dow climbed 1,000 points. Again, I'm going to repeat myself in 1 minute. The S&P over 150 points. The NASDAQ 500 in 1 minute. This comes out 0.1% worse. They tried to go, okay, we need to react, and it didn't happen. And here is what and why I think it didn't happen. I'm going to flip over very quickly, and then I will get to here. But I want to just talk a little bit about maybe what's behind the curtain. And let's go to take a look at the VIX. Now, that's the volatility index, the CBOE market volatility index. And now here, all you have to do is go right underneath it to get that we have the ProShares Trust VIX short-term futures, the ProShares Trust VIX midterm future, the VIX short-term futures and the ETF, the short-term future ETF with the net asset value versus shares outstanding, the CBOE 1-year volatility, the CBOE 3-month volatility, the CBOE 6-month volatility, the CBOE 9-day volatility index, and then the ProShares VIX midterm futures and ETF. Whew. These are just the ETFs and the indexes on the original CBOE market volatility index. And we haven't included VXN, which is the NASDAQ. So talk about derivatives. That's what I'm going to do. We're taking a look at the VIX future right now. And you can see what happened. Coming into that figure, volatility dropped on it was 0.1% under expectations, so worse than what they were expecting. Volatility dropped into the number, dropped after the number, and then finally perks itself up at 10 a.m. Now, I just want to go back over. Let's take a look at the ES. I'm going to open this up. These are comparisons because now you're going to see what is happening to force the market to do what it was doing. Now, this is leading up to the number. This is after the number has been released because we get it here, then it goes here, then it dumps, and then it rallies, then it dumps again. Okay, now remember that one more time. What did we do? We sank, we rallied. We sank, we rallied, right? And here, different. We sank, we rallied, we sank. So the volatility being adjusted caused the price movement in the underlying, not necessarily in the VIX, but all that money being shifted around pushes money into other areas, out of other areas, et cetera, et cetera. And it's just this, today, it was volmaggeden. And I started to talk about that yesterday when I was being told about some volatility positions that were rather large and in advance of the release of the CPI number and what that could possibly do in terms of a reaction. And that reaction, we could have gotten a very large reaction. That's why I brought into the conversation the last time that the CPI had a very large reaction on a 0.1% better than expected number. Today, we get the opposite, and the market basically accepted it as the positions in volatility were not going to explode. We're not going to explode. That's kind of what happened, because then volatility then drops again and manages to drop all the way down and then picks up right into the bell. Now, here's the gig. These options in vol and volatility, the VIX, expire tomorrow. You can see all the strikes that have come into the picture, and bets are being placed big right in this window, 22 to 18. I think if it drops below 18, it's going to be pretty wild. It's going to be pretty wild because there's nothing there. So there'll be a mad dash scramble to produce all of these positions. It should be a very interesting, because I would imagine that the volatility is going to continue to have a play in the market simply because of the amount of money that's being shifted and moved around. And what else volatility affects? So this is what is happening in our market. Now back over to the futures. It truly was not the easiest day to trade. Number one, because of the hype, because of the everything that went behind the CPI number that we've been now kicking the can down the road. We keep getting all this news from the Fed and from Fed governors and from the big banks and everything. Oh, you better be ready. We're going to go into recession, et cetera, et cetera. Not looking so good, not looking for earnings to be all that great, blah, blah, blah. And then meanwhile, the earnings are disappointing, but not super disappointing. And then we will have something like Airbnb come out and go like, we're blowing the doors off, whether they're truthful, whether they're not, who cares? The fact remains that's what got reported. And it caused the stock to jump $15. So it's where the market wants to place its bets, where the market wants to make its move and throw big amounts of money so that they can get something back from somewhere else. I don't know. But it is getting a little nutty. Now that continues to hold and adhere to what I expect to see, or what we look for when we're inside of this larger type of a move called a B wave. And so when we're inside of that, it's just nutty. Now, where are we inside of that, Michael? They asked. Well, I want to tell you, I'm leaving the same count. So I do believe, and now I'm going to switch over one more time. I want you to see this very clearly, how I've got this labeled. So I'm going to switch over to the line chart. And this is, to tell you the truth, I don't think I'm breaking out of any norm or any rules or anything else if I'm not including the tails, the extremes that the market drives itself. By looking at it on a closed basis, we're getting the true picture of really what the market is doing. The extremes are just that. They're extremes, and they're emotional extremes. They're in reaction to the CPI number. So it's an emotional extreme. What are you feeling? What should you think? Well, initially it's like, well, we went up. Yeah. That was worse than expected. Isn't that bullish? Everything's bullish. Nope. And it turns bearish, and they really went after it, and they knocked it straight down. And then flew back up. So I want to look at the hourly chart. We can look at now the whole thing. There's the 3. The 3 would be there. It's over there somewhere. There it is. So the 3 is there, and then we have an ABC down for 4. And then 1, 2, 3, 4, 5. Either that, or I'm going to go 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, 1. If you remember yesterday as well, I spoke of the fact it's like, well, and I was looking at this. over here because this hadn't happened yet. That maybe this was only one of minute 5. As it turns out, I believe it is. Because if the CPI number comes out, they're still not ready. Still not looking like, okay, we need to look at the reality. Reality is X, Y, and Z. And we're over here looking at, STU or whatever. Instead of what literally lays in front of us, we're going to focus on what we've already done, and then we're going to focus, et cetera, et cetera. So we're kicking it yet again. And now it's going to look like what we're really heading for is Friday's expiration, right? In terms of volatility, tomorrow's expiration. In terms of ES and SPX and some of the NASDAQ indexes, tomorrow's expiration. There's options going on. So in reality, it's going to hold everything up again in all directions. Because in true that the market should not necessarily be breaking up. But did you see what they did? Look at how they did. They went after Tesla again. And they immediately moved it back to above 200, and then immediately went up and decided they were going to go after the 210s. And they succeeded. They've now gone up there. So what does this show? 1, 2 does come in as an ABC. That's our CPI number. Gave us the wave 2. Not a completion, right? I talked a great deal about that. Maybe the CPI number will toss it up here. We'll put in this 5 and be done and get a rejection. No, that did not happen, obviously. So what do we got? 1, 2. Maybe 1, 2 again. And it does look like we should launch higher. We should move up and at least get in through all of this stuff. Now, if we're looking for a third, and I'm going to keep it on this level on the line chart. So it's going to look a little bit different. And so it's not going to cover the extremes. But I'm going to go and I'm going to put, let's look for what a third wave may or may not look like. So we're going to go there, to there, to there. So a third wave, longest and the strongest out of the 5-wave sequence within itself. So now we get this big third wave of a third, right? Good. Now, where can we come in? 100% where wave 3 would equal wave 1 is 42.15. Where it is greater than is up here, 42.38. If that's just going to do a wave 3, we get a 4. We still got a solid chance, folks. A solid chance. And this could happen by Friday of this market reaching 4,300 before we turn. It's been, it's been talked about. It's been out there. It's been forever discussed, 4,300. We're going to 4,300, 4,300, 40. I'm telling you, that's all I've heard. And there it sits in all its glory with all the fibs sitting all around it. So it remains potentially an area where this particular 5 waves and then being labeling a wave C could come to its conclusion and could be a turning point and could be a sizable turning point. So again, what will the catalyst be? At this stage, it's got to be wrapped around some type of derivative. It has to be wrapped around where they're actually going to be putting on positions that can't be squeezed. Or if they are, we're squeezing the longs. And that means the market will be going down. So again, what we need to leave open and leave potential for is that the market will continue to move higher. Here are some resistance areas for the third wave that I think may be in force right now. And that's 41.52, 41.65, 41.80, 41, I'm going to say 85, 80, yep, 85, 86. Then we have 41.95, 42.09 to 42.15, 42.38 now to 42.68. That's a big little window, 30 points. And then we have basically 78 on top of that, 85, 43.01 to 43.22. I still don't want it above that X wave, and that's at 43.27. So, and it would be flat as flat can be. And remember, I talked about that we get an A and a B, right? We did an X wave, now we get the A wave down, we get a B wave, and they end up being flat, even though that A wave was 5 waves. Things are looking very different than what you would expect. But the patterns themselves are holding true to what's actually spinning around us. What is changing again is what is affecting trade every day. And one is, of course, we're all looking for, gee, how should we be reacting? And then we get a big reaction off of last year's yearly figures out of these stocks. Like, oh, they made great money last year. It's like, that was last year. They're warning you that we're moving into recession. They're likely not going to make that kind of money. But this was last year. So I'm going to go buy the stock now. I'm going to be ready for next year. It's like, okay, don't pay any attention and then wonder why you lose money. But that's a different conversation. There's a lot still being pushed into the market. NVIDIA, great move today to the upside. Awesome move to the upside. The traders at NVIDIA, they're trading in the options. They're making good money. Stock, they made good money. And they didn't care that it was going up or down. They just traded it. That's got to be our approach in the futures as well. No more bullish or bearish. We just trade it. Because today, actually, and not that it was the easiest of trading days, but it was not the hardest. You did need to pay attention. You couldn't be a little bit more passive about it because you've been caught in a move and then it would whipped around and you could take a loss still waiting for your move, depending on your account size, et cetera, et cetera. So if I'm expecting it to go up, it's going to go up in a third. We're getting a little 4, and then we get another 5th. Tomorrow's only Wednesday. Now, just to take a peek, I want to go look and see what we got coming in terms of economic reports. So let's fill in that gap. On Wednesday, we have retail sales, the Empire State Manufacturing Index, and at 8:30 a.m. Eastern. Then we have industrial production at 9:15, business inventories and housing market index at 10 a.m. Those all could likely produce something. Also, we have Atlanta Fed business inflation expectations. Since inflation's a key word, that may, and I mean, that one's listed as black, which means nobody cares. We will see, but all of those things come out, so we get not a whole ton, but we get enough figures that could push things around and create a little vol move. Thursday, we have housing starts, jobless claims, Philly Fed, and PPI final, all at 8:30. So we would get it before the opening. And then Friday, pretty light import and export prices. Now, we still have all the Fed governors being pushed all around. And today, there were 2. Larry Logan, Lori Logan, Patrick Harker, and John Williams all spoke today. The market, when Patrick Harker spoke, the market went up. When John Williams spoke, the market went down. Difference between dovish and hawkish, and I kid you not. There are algorithms that are going to go for the news, and they are going to interpret the news, and they take, excuse me, they take a word, hawkish, sell, dovish, buy. So, what a way to use artificial intelligence. Okay, back at the market, we see what can influence and try to put all this together. Again, I want to just spend a little bit of time, just very little bit of time. It's not impossible to make money, but your mindset and your ability to really just hone in and focus without, I'm going to use the word, prejudice. You're not prejudiced to an upside or a downside. You're just prejudiced to absorb what's happening right now. And that is producing a lot of trades in asset classes and all kinds of different things. Derivatives, underlying, indexes, ETF, etc., all of it. And because they're also massively traded, you trade. So when we focus and you don't care why, and you can't really take that moment to try and determine why. Today we had a big figure, one that a lot of energy went into, and then it didn't do very much. It did something, but basically by the time the market opened, it's like, they went after Tesla. NASDAQ wasn't going to go down again, right? Didn't make any difference that Microsoft had to come off, that Apple had come off. No, they went after Tesla. They went after NVIDIA. The balance did okay. But those two combined, bam, 8% of what the NASDAQ did today came from two stocks. So this is 2023. So trading it, you got to just pay attention to the price action. You have to pay attention to your technical indicators right now, your moving averages, what they're doing, how they're doing it, trying to make sense out of the chart. And that would suggest also that you move between the line chart, which again is a closing basis, right? So it's only once an hour. And then you have the candlesticks, which include all the tails. And that's what I mean by tails, folks. We got a tail and a big tail, but it was first down, and then it was a bullish tail. Forms a big hammer, gets over here, drops again, and then drops a third time, and then just rallies for the balance of the day. So I'll go to the NASDAQ in just a moment. If we just take a look at the moving averages right now, look at that 200. Flat, flat, flat. So, but I do think that it will start to turn again once we get it back up closer to 4,200. A breakup of 4,200 should put everybody back into position right now. They are. All right, we got the 4 and the 8 flirting around the 20. The 20's right there. I know. Let me do this. Sorry. I can see it, but you can't. 20's right there, the 50 and the 200. So they're in alignment, and then we have the 4 and the 8 hovering right above. Any more downside, they slide, and then we start to turn, and then maybe we can get more downside. That is a possibility, and it can happen tomorrow. Again, support, and then you got that support down there. Then it drops pretty quick. So we get support at 4,100, which is where it was parked today. We had resting orders there at 4,100. They would defend 4,100 today. So that sat there, that stopped it, and then we were going to get up back to the middle, right? 4,200, seller's going to sit. 4,100, buyer's going to sit. In between, everything you want. So here are resistance levels on the way up. If the market starts to keep ticking, which it may, would suggest that Tesla continues to go, something else gets perked up and decides to follow. Could be Meta, could be Microsoft, could be NVIDIA. Pick one. Could be Apple. Apple did everything today. So again, upside, downside, we've got that. Same thing. And nothing's changed in terms of if it really starts to break down, we may switch this back over and call it a failure. But right now, it's not appearing to be such. And I'm tracing and I'm looking at that more closely on the line chart, which continues to kind of influence me into how I want to view this market. Over in the NASDAQ, it's really the same story. 1, 2. You can see we came down in 3, and that was the 4. Now I'm going to go over to the candle chart, open it up, and you see it really looks exactly the same as the S&P, kind of crazy. But there's very much more prominent. CPI, we go up, we come back down, we go over there, we go up, we go down, and then we go up, go here, go up, and then back down. So, just kind of bebop around till we finally just get caught up in Tesla and NVIDIA and just push higher. What can we say except it's looking to be the same thing? So 1, 2, 3, 4, 5, 1, 2, right? Because this, you'll see, boom, 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 right? Here it was bump, boom, bump. This down bar went much further and then came all the way back and closed green. So that's why you get that. So I like it a little bit better on the line chart. It makes it clear 1, 2. And I moved that out of the way so we could see it, but it still should be all the way down here, which tells me, oh, look. So if that's 1, 2, we're into the third. So, I mean, I'm expecting in the NASDAQ for prices to continue to go higher. So I'd be looking for Airbnb. They loved it. Airbnb was up, I think, $14 or $15. I'm not sure where they are now, but we have some movers. So again, here in the NASDAQ, let me just bring this in a little bit so I could bring out some more. To the upside, I can add one more layer. This is the C wave. So these are the outside, I believe. No, those are these inside. That all the way on the outside are the C wave, the larger C wave. Okay. So I'm going to go down to here. It's the larger C wave. And we're already above all that. So we got much higher levels. Okay. Let's add. We can add a 1 and a 2. And again, I want to open this up. I want to bring it down. I want to put it on the line chart. So, so that I can bring it into focus. 4. That's going to be 1, 2, 3. I'm going to go from here to here to here. All right. So on a third, 12,790 is 100% where wave 3 would be 100% of wave 1. And on these closing basis, but we have 12,866, 12,913, and then we're almost. But even on the cash basis, or on the line chart basis, excuse me, we would not be above that high. This is where we start getting above that high. But then again, wave 3, up into here, I think, taking a good look at 12,900 possibly, come back in a 4, and it will be in that 5th wave, and we're still looking like we have 12,990, 13,000, 18, 13,030, 13,050, somewhere, no, 50, yes, to 83, and then we have 13,114. So that zone still looks like it could be 3, 4, and a 5. Complete the wave 5, complete the wave C. So we're still looking into that same area in both markets. Both the S&P and the NASDAQ still kind of hold on and project to these levels that I gave yesterday and kind of have held. Now we're getting another layer that adds another zone right up in here. So looking very probable, I'm going to say. So the 1, 2, 3, 4, 5, and then we get the downside. So for the balance of this week, I think we go up. I'll take this down so I can look at the moving averages. All right, so let's do it this way. Remove and do that. Okay, moving averages pretty flat. Even when I put it over here on the candlestick chart, pretty flat. Come on. So everything's flat. The 50, is flat. The 200 is very flat. The 20, barely acknowledging that we did have a good little rally in there. So I'd be looking for that to continue. Downside, it's the same story. If it's going to go, it's got to go and keep going. Remember, every time I say that, it's like it gets started, but it stops. So it's got to go and keep going. Now, I would say, well, yeah, duh, it makes sense. Of course it makes sense. But that's what has to happen. But I mean, it needs to drop below 12,000 pretty quickly. That's what I mean, go and keep going. We're not going to declare 12,000 support if this thing is giving up the ghost and starting to drop. 11,000 won't be support. 10,000 will. So it'll drop pretty quick because we rallied up pretty quick. So again, take it day by day, take it price action by price action, and it is tradable. I urge caution. I watch your indicators and be open. Don't be stuck on bears or bulls or anything else. Don't be stuck on the media trying to spin something. Just trade what's in front of you. There's plenty to do. Don't get caught up in the hype. There's plenty to do. Just trade. That's what the algorithms are doing. They're just trading. It's the rest of us with the human mind that have decided to fill in every blank that we could try to fill in because we have to have a reason. We have to know why. We have to know what. We have to know how before we're willing to make a decision. So here we sit, searching for information. That's it for today. Our next update will be on Wednesday, February the 15th.